All right, guys, welcome back. Thanks for joining today's second guest speaker webinar of the day. As always, my name is Keith here with Shark Indicators. We've been involved in the NinjaTrader ecosystem for more than a decade now, providing tools like Bloodhound and Blackbird that help traders be more productive and in control of their own trade systems. We're always looking for ways to add to the trader's toolkit, and this guest webinar is a big part of that mission. Before I pass it off, very important, let's take a quick look at the risk disclosure. Futures, foreign currency, and options trading contain substantial risk and is not for every investor. And of course, past performance is not necessarily indicative of future results. Rob Mitchell has won the prestigious Robbins World Cup Trading Championship in the E-mini S&P. He's been developing trading systems and methodology since, get this, 1991. He's been known at various times as the largest E-mini trader in the world. He's also the CEO of Axiom Research and Trading and its associated companies. So with that, Rob, go ahead and share your screen and we can get started.
Thank you for that introduction, Keith. Thank you. And welcome everybody to the webinar. I'm super excited about this webinar because we have a lot to share. Yeah. And I'm sharing with you today some things I kind of wish I had known when I got started because I didn't really have help. Yeah. And so I'm going to be showing you some of those things. We're going to put a little system together and stuff like that. So,
and Rob, just to double check, I'm not seeing your screen. Are you sharing?
Let me make sure that I am. Okay. Thanks for coming in to join us, guys, for the webinar. I'm going to share with you today some things I wish I'd known when I started trading a million years ago. Yeah. And without any further delay, past performance not necessarily indicative of future results. There's a risk of loss trading futures, and don't use the grocery money for trading. Yeah. I'm going to cover today in this webinar, I'm going to cover some proven strategy methods, and I'm going to cover some order flow methods, and I'm going to cover some secrets about how markets turn and a whole bunch more. And I kind of have this broken down into a couple of different chapters that we'll cover. Right now, I made a worksheet for the webinar. Right now, go over to IndicatorSmart.com/Sharky and get your webinar worksheet. Yeah. Because that's going to give you discussion beyond what we're going to cover today, because we're going to cover a lot of material, and it also help you to give you some more ideas. And then later on, I'm going to give you an opportunity where you can also use that sheet to advance your learning a little bit. So IndicatorSmart.com/Sharky and opt in for that and get your webinar worksheet and checklist. Yeah. So that is going to cover some concepts that we're going to do in the webinar and beyond, and it also ensures that you will receive some benefits going forward. Yeah. Now, I had an interesting life, really, because I kind of never really followed. I took the road less traveled, if you will. And when I was a kid, my dad had a client named Joe. And Joe was kind of like this mystery man. We never saw him as kids. But there were always like gifts on the doorstep on all the important holidays and birthdays and special occasions and everything. But I never really remember seeing Joe. But I do know that he was a wealthy stock market guy. He lived in this big penthouse in downtown Detroit that looked out over Ontario and all around the city. And back in those days, Detroit was like a really wonderful place. And then one day, my dad told me he had a new client, and when he asked the guy how he was able to stop working for Joe, he says, "Joe told me a secret." Now, I was probably about 8 years old at that time, and that one sentence, Joe told it, because my dad didn't ever speak much. It's just that one sentence, one time. Joe told me a secret, and that made me wealthy. And that kind of put me on a journey towards finding, if you will, the Holy Grail long before I ever really even knew anything about trading. Yeah. And through persistence, I eventually discovered a lot of things, and I'm going to share some of those things with you in today's webinar. My mom just constantly talked about the stock market as I was growing up. And she also talked about how much she hated her job. So I think ultimately she taught me stock market don't work. in addition to Joe told me a secret. So it's just a little bit I was reflecting on in the last couple of days that like, how did you get where where you are today? Yeah. And so I thought it'd be nice to share that just to put a little context around it. So it's my intention in this webinar to share more things with you that might help you in your trading, ways of thinking, techniques, methods, things like that that I've learned over the years. And if I've learned anything, it's like every trader sees things a little differently. So some of the things we discuss might make a little bit more sense to you than others, and that's okay. Yeah. The ones that do make sense to you are the ones that I want you to take away from it. Yeah. And so if it doesn't seem to totally make sense right now, that's okay too, because it's kind of like planting a seed in the garden. Maybe later it comes bubbling up, you're driving down the road or walking the dog or whatever. And so kind of like that secret that Joe knew, so to speak. Yeah. Because trading's a journey, and for each one of us, it is unique. Yeah, it's unique. So I'm going to cover some ways. First off, I'm going to cover some ways of seeing and understanding trading. We can kind of call that chapter 1. And then that's going to like segue into chapter 2, where I'm going to start talking about trading system design. And these chapters are very much related, and I'll cover at the end of the webinar how those things all connect together. Yeah. So we're going to cover that, and then I'm going to cover ways of classifying market turns, and that turns into trading. Yeah. And it not only turns into trading, it turns into very specific ways of approaching the trading and doing it in multiple dimensions that can help us build a little bit of a trading system, if you will. I don't always call it a trading system because once you learn this method that I'm going to show you, you can do all kinds of things with it. Yeah. So, and then we're going to test it a bit, and we're going to show some results, and then I'm going to show you some more resources for where you can get some more stuff. Now, if you've ever been to one of my webinars before, you know it's information packed. And that's also why I wanted you to get the checklist at IndicatorSmart.com/Sharky, so you can stay up with it, because we're going to be covering a lot of ideas, but they all boil down to the one thing. Yeah. And as I said, I wish I'd known years earlier these things, that they just come over the years. And I've been teaching trading for 10 years now, and which is a very humbling experience to kind of understand that the way different people see different things. Yeah. And so anyways, if you only get a couple of the concepts, that's just fine. It'll still be very useful for you. Yeah. And you can use it anytime you want or anytime you're ready. So if you can't come up with a solution to a problem that you don't know you have, yeah? So if you did, you wouldn't even know that you'd arrived at anything useful. And so it is for many traders, yeah, that don't know that they have an issue or a problem that needs to be solved. And a lot of times that just has to do with doing just the most basic thing, yeah? Just the most basic thing. And so I'm going to cover some of these basics as we go here. And the reason that's important is because if you've got basic kinds of things at the core of your thinking, then if something goes wrong, you can learn from it. Yeah. And if you don't have basic things at the core of your thinking, if it gets pulled out from under you, it's like there's nothing there, and you can't really learn from it. The important thing is the learning. Yeah. And so if you have a core concept that drives what you know, then it can help you to advance. And if you don't, you're kind of in trouble, but you don't really even know it. Yeah. So we're going to cover some core concepts right now that are inherent to good, robust trading system building methods, and something useful you can take with you from this day forward. So I'll give you an example. Yeah. How many trades do you need per day to be successful? Now, this is just the most basic idea. Yeah. Just the most basic idea. Well, I've learned that if you just start with one, just the one thing, yeah, you're just one, yeah, from this day forward, when you trade, you're asking the question, when you take the trade, you're asking, is this the one? Is this the one trade I want to take? Or if you asked yourself, for example, if I could only take one trade a day, which one would it be? Yeah. What that does is it contextualizes things down to that basic thing, that minimum thing. Is this the one? Yeah. And so what happens when you think this way is it helps you to get some results. Yeah. It helps you to get some results because you can reflect back on that core thing. Yeah. Could I have found a better one? Yeah. And we have a saying in the trading room that we call it the 100% axiom. There's always a better trade coming along. Well, maybe there's not, but the chances are pretty close to 100% that there might be a better one coming down the pike right at you. Yeah. And it may seem like a small thing, but it's very, very useful. So I thought I'd share that with you today. So chapter 1, core concepts, we're going to blast through a bunch of these, and those are listed on your checklist from the Sharky page at IndicatorSmart. Yeah. So core system building principle number 1, markets and the shapes on your charts and indicators are driven by people. Those shapes are human behavior, collective human behavior appearing as a geometry. Yeah. So I have a background in psychology, and I've spent my whole life around my background in psychology and the applied statistics associated with it. I'm a experimental psychologist, and behavioral trading models are super reliable. Why? Because people are super reliable. You can pretty much rely on the way people are going to behave, particularly in a situation like trading. Yeah. And so the trick is to get the market is to know that the market is composed of different groups of traders, and so that makes it a little bit more dynamic. But in general, once you start to see the market this way, you'll see it responding to these different areas on the charts where people make decisions. Yeah. And so your trading method, I'm suggesting your trading method should in some way relate to this directly. So when you're making a trade and you've got all this stuff behind it, you're asking yourself the question, is this method being driven by the way people behave? Because if you're looking at a chart, the shapes that you're looking at are the shapes of people making that shape. Yeah. Okay, core principle number 2, normal to abnormal. Trade from normal to abnormal. Yeah. What does this mean? Well, in its simplest form, take trades where the participants in the market are collectively balanced. Yeah. We're going to build a strategy later around this. Yeah. Where it's collectively balanced. In other words, you don't wait for the market to move like 75 ticks in 30 seconds and try to hop on board with it. Yeah. You try to trade it before that happens. That'd be one example of it. Yeah. So system building core principle number 3, market movements are skewed. I just described that actually. I said, okay, the market moves 75 ticks in 10 seconds. Yeah. And you decide to hop on board with it. You're like, it's going to the moon, right? No, it's not. It's going to get you, yeah? More often than not. Sometimes it'll work out, but more often than not, those who have been around the block a couple of times know this. And so the markets go from small to big in short periods of time, and then they consolidate. Or worse yet, they just reverse, yeah? So if you get on the wrong side of the cycle, you have a problem. Yeah. So in the first terms, trade from normal to abnormal or from not abnormal or skewed. Skewed is when the market just goes too far too fast. Yeah, that's one way of looking at it. Yeah. Core building principle, system building principle, sub number 2. It's especially true in trapping situations. Yeah, when you get to market edges. Yeah. What is a market edge? Is a place where traders would take profit. Yeah. Traders take profit or they've met their goal. So, what do you do after work? Yeah, let's say you got caught in a trade and it goes all the way to this goal and you're finished with work. Yeah, that is the psychological equivalent of it. Yeah. What do? Well, either you go home and you crash or you go out for a couple of, cold ones or whatever you do. Yeah, but you're not trading anymore. Yeah. And so what happens is the market just stops or worse yet reverses. Yeah. So that's another way of looking at this same principle in different ways. Yeah. Core system building principle number 4, the gambler's fallacy. I just decided to kind of throw this one in there. I'd actually known this one forever, but it came to mind while I was writing this up. And so I was going to share this with you. It's important to know when you're trading whether events are exclusive of one another or if they're related. Yeah. So the example would be if you flip a coin, it's roughly like 50%. Yeah. 50% every time. So every coin toss is exclusive of the ones before it or the ones that come after it. Yeah, but in trading, that's not always the case. Yeah, like if you got a trend that's going to alternate, over $1 price range, for example, and it's going to alternate 3 or 4 times, different points in that span have different chances of being successful than other ones do. Yeah. The equivalent of this would be you got a bunch of black and white marbles in the bag, but each time you reach in and pull out a marble, you don't put it back in, and then the ratio is changing from the original 50-50 black and white marbles to a different ratio. And so if you pull out 5 black marbles and there's 15 white ones still left in there, the probabilities are changing that the market's going to reverse. Yeah, it's the basic idea there. Yeah. So that's a super important one. And this could relate directly, if you're thinking in terms of like systems, this will relate to things like consecutive winners and consecutive losers. Yeah, those kinds of stats. Yeah. Okay, core building, system building principle number 5, as it goes versus getting worse. Now, we kind of already alluded to this in the last one, but it's a little bit different, yeah? It's important to know if as you move towards a region on the chart, if it's becoming more likely to get there or less. Yeah, more likely to get there or less. I'll give you an example. If you are moving towards, let's say that the market profilers are in control of the market, yeah, and you're moving towards a value area low, say like you were today in crude oil, for example, yeah, moving towards value area low early in the day, and all those guys have it in their head that you're going there. Well, what's happening is as you go, those people are thinking more and more that we're going there. Yeah. And so you don't want to get against them as you're going there because the majority starts picking up a majority as you go. On the flip side, the market's going to alternate on its way there. So each successive alternation or extension, if you will, may have less. I'll give you an example just off the top of my head. On a smart super Renko bar, we're going to look at some bars like this later. If you go 9 continuation bars in a row on a chart like that, just in general, on the one that we're going to look at, if you go 9 continuation bars in a row, there's about a 99% probability of a reversal. Yeah, but it could do that 3 times on its way to the value area low in the example that we're talking about. Yeah, so as it goes or getting worse, probabilities. Yeah, this is also very useful in life because people will tell you different statistics about things. You ask yourself the critical question, hey, what kind of statistic is that? Is the one that's get more likely to happen or less likely to happen as it goes? I call it as it goes, yeah. Okay, core principle number 6 for system building. Be careful at the edge. Markets trade to edges with really high probabilities. I would have put like 14 underlines under that really if I could have. Yeah, edges are invitations to traders to take profits or fade. Yeah, to take profits or fade. So the best trading systems trade to edges. Yeah, what'd be an example of an edge? Overnight high, overnight low, yesterday's high, yesterday's low, value area high, value area low, 30-minute period edges and stuff like that. Yeah, that's a bunch of them right there. So core principle number 7 for system building, what's the market trying to do right now? So given all these other things that we've talked about, you kind of have an idea of all those things and you're asking yourself the question, what's this market trying to do right now? Yeah. What's this market trying to do right now? And I would urge you to, at the minimum, play with that idea of just kind of being aware of that. Because you're asking yourself that while you're having a conversation with a friend or a family member or whatever, aren't you? You're asking, what are they trying to communicate to me right now? Well, why wouldn't you do it with the market if the shapes on your chart are the result of human behavior? Yeah, it's the same thing. It's like you're having a conversation. Yeah, what's the market trying to do right now? And once you start thinking that way, all kinds of other little things are going to start revealing themselves to you. And then core principle number 8, what's the most likely direction for range expansion? What direction do they want it to go in? Now, we've already covered a bunch of examples of this kind of thing. Well, they want to take it to the edge. They want to take it to the value area low. They want to do this. They want to do that. And so you're asking yourself, what's the most likely direction based on the way behavior works for each of these different things? And so to have these kinds of ideas floating around in your head, because when you do, you're actually making a vision for your trade. Core system building principle number 9. Have a vision for your trade by taking all the stuff that we've been talking to up to this point into account, yeah? And then the really cool part is watch your prophecy be fulfilled. Yeah. If you engage this process in your mind, I promise you'll start seeing all kinds of things that you never would have seen if you hadn't done it otherwise. Yeah. System core building principle number 10, we've already covered this. Yeah, this kind of wrapping it all together. Master one thing first. Yeah, master one thing first. And then we're going to build a little system that's kind of a one thing. Yeah, it'll kind of wrap all this stuff together. Core system building principle number 11, trade trends. Yeah, clean structure and stay away from the abnormal skewing, the things we mentioned before. Trade trends. If you're going to be a counter trend trader, then trade counter trends. Yeah, but I recommend you trade with trends. Why? Because you get a herd going with it. Because behaviorally, people are what? They're like tribal, yeah? They don't want to be left behind, and so they do that. Yeah, that's the most natural overall human behavior. Yeah, yeah. And then core principle, system building core principle number 12, the very best trading methods are simple. Yeah, it's not some sophisticated thing with like log functions and, you know, hyperbolic paraboloids and stuff like that. Yeah, it's just simple. Yeah, so keep it simple. Yeah. Okay. Hopefully you've got your webinar checklist from IndicatorSmart.com/Sharky. And that goes into some more depth on these concepts. Yeah. And so now we're going to go to chapter number 2 as promised. Chapter number 2, trading systems. Yeah. And everything that we've discussed so far is related to what we're going to talk about here. Yeah. So the 4-quadrant approach to system building. Yeah. This is something that I've come to after decades of doing this. If you use several indicators and each one is contributing to the strategy independently, then each will contribute to the overall outcome. Yeah. So if I have 3 different indicators on my chart, and each one of them can stand on its own, that's another way of putting it, yeah, then each is part of the result. Yeah. So as long as each one is more than 50% in the contribution, then they add to the result. Yeah. So typically, like things that I would show you, just as a general rule, I wouldn't show you anything that's less than 75%. Yeah. Now, according to a theorem by a Methodist pastor named Bayes, who worked out this formula that is a huge part of my career, yeah, especially in the last 10 years or so. If you take 3 of those 75s and you put them together, you're going to get about 96%. Yeah. And it works. In fact, it works in all different kinds of ways. So we we use this for all kinds of stuff. Yeah. It's very, very cool. It's very, very cool. Yeah. So, but you don't have to get all mathematical and sophisticated about it, because I like rules of thumb. I want things to be simple and intuitive. I don't want to have to be doing a bunch of computations while I'm trading. It's not good for me. Might be good for you. I don't know. Yeah, probably not. But if I got 2 75s, it's 90. If I got 3, it's 96. So I could be when I'm looking for the trade that's the one, I could be asking myself, do I have 3 75s here, or do I have 2 75s and one that's taken away? Yeah. Because I want to have a 90% in my favor or better. Yeah. So from here, at this juncture in the webinar, I'm going to add to the discussion some order flow methods that you could use to build trading systems in Bloodhound, or to use Bloodhound as a research tool, which is I use Bloodhound as a research tool big time. Yeah. And I'm going to show you a little bit about how to, I'm going to tell you a little bit about how to do that. So in past webinars, I've built some trading systems, and I thought about maybe even doing that today in Bloodhound, yeah. But I really encourage you to do the coding on your own, yeah. And you could code up the kinds of things that I'm going to show you here today, yeah. And so I decided to take this approach. And when you build your own strategy, it's important not to buy, this is just my opinion on it, not to buy canned strategies, because if it's any good, you're going to have 43 trillion people hop on board with it. And somewhere before you get to 43 trillion, it's going to start not working really bad. Yeah. So it's going to start not working really bad. So I like the idea that you go in and build your own in Bloodhound and get your exact version of it. Yeah. So now we're going to turn a little bit to how markets turn. Yeah. And we're going to do it with price action, momentum, and order flow around the turns in the market. Now we could spend months or even years messing around in this space. I'm going to show you a real simple, one way to do it. Yeah. And so price action, that's your price bars. Yeah. The momentum, yeah. And then the order flow, that's 3 panels on your chart, and the chart we're going to use. And we're going to build the chart 1 panel at a time, I'm pretty sure. Yeah. So the first step in doing this scientifically, so it's repeatable. What does that mean? Reduce down to that basic thing, yeah, involves creating a pattern, what we call pattern classification. Oh no, it's pattern class. Well, what's that? Sounds like science class. Now he's going to start making me do the 6-step scientific method or something. No, we're not going to do that. Pattern classification is just a shape. It's just a shape. So like if I've got an even tick Renko bar, say 20 ticks, yeah, 20 ticks for reversal, 20 tick continuation, and then so what pattern constitutes a reversal, and how many bars does it involve? Yeah, what's the minimum pattern for a reversal that you could have? Yeah, a lot of times I'll use letters for that. It'd be like A, B, C, D. Yeah, A, B, C, D. So that would look something like this. If I define the pattern as an extension, a reversal, and then continuation, this would be the minimum one. These are 20 tick, 20 tick, 20 tick reversal, 20 tick, and then continue. Yeah, this is the minimum for a continuation pattern with a bar like that. We call this a 1-1-2 pattern. Yeah, 1 reversal bar, 1 continuation bar, and 2 reversal bars. Yeah, and then the breakout. Yeah. So that's your minimum pattern. This is human behavior expressing itself as a shape. At least that's what I'm submitting. You say, Rob, you're crazy. There are no people placing those orders. Yeah. So we could call it A, B, C, D. There'd be another way of seeing it. I find this, like I said, you see things in different ways. I had one guy probably got an IQ of 165. He could not get this concept. Yeah, so I would describe it in different ways. Yeah, I could say, oh, this is like shaped like a parallelogram. It's just a parallelogram with the edges going like that. Yeah, it's all different ways that you could see or understand that. But the D point occurs on the break of the B. So you go A, B, C, and it's not D yet, and then you go 1 tick, you got a D. Yeah, 1 tick and you got a D. Yeah, so I'll call that A, B, C, D. And that's the basic simple pattern classification that we're going to use today, or shape. Yeah, and there are other ways we could classify it, but this is the one we're going to do today. And then next we're going to look at momentum. Yeah, and in particular, we're going to look at the color or the bias of the momentum. So I put this on here. This is a smart momentum. I use this tool every day for like 12, 13 years or something. Yeah, I'm pretty familiar with it. When this guy crosses, yeah, when it crosses, when it crosses, and when it crosses, yeah. I didn't go spend 45 minutes trying to find this chart and make it look like that. Yeah, when it turns green, that was another way you could see it. Oh, when it turns green. Yeah, oh, when it turns red. Yeah, I draw these nodes here, yeah, like that. Yeah. So that's the momentum. This is called the smart momentum. I use this forever. So that'd be the basic pattern. What am I doing when I do that? I'm using it as like a pre-trend indicator. Yeah, pre-trend indicator. Yeah. Now let me show you something else with this. I'll show you. I can show you tons of ways. We just look at all different ways to understand a momentum. But look at this. This is coming off this high, and I go first continuation bar, second reversal, reversal, 112, or however you want to see that pattern. But notice that during this interval right here, during that entire interval, this didn't change. It's still going lower right there. This didn't go lower. Yeah, it didn't go lower, but this is going lower. Yeah, we call that pulling. Yeah. It's a reversal, reversal, two more reversals, 112. And what do I know? Right on that bar right there, it's pulling. It's pulling. Yeah. The momentum is pulling. What does that mean? It means the price is under momentum, because you could have a momentum tool that is divergent and not being pulled by price. And if it's not being pulled by price, and you just chunk all those things into a category, and when you're coding something up in Bloodhound and you don't pattern classify it like this, you're going to get a whole smorgasbord of different kinds of things. You know, whole bunch of different kinds of things. If you don't classify the momentum specifically to something like this, there's many different classes or ways of reading this that you could have. Yeah. Well, I hope that concept is clear. Pulling. Yeah, the momentum is pulling. So the price itself is immediately under momentum. So once this exact pattern is established, then that stands on its own. We talked about each of the 75, 75 stands on its own. Now I'm not going to get into the nitty gritty of all of that. I know this to be a good 75% or better. Yeah. And so I'm going to let that be one of the things that's contributing. In other words, it's a pattern classification that involves price action and momentum very specifically, and it is irreducible. It's the one. Yeah, it's irreducible. So how do you build a scientific trading system based on repeatable patterns? Well, this is a good example of how you do it. Yeah. This is 4-quadrant system building methodology that you can learn about at the home page of IndicatorSmart. Yeah. At its core. Yeah, very, very powerful stuff. Yeah, very, very powerful stuff. So next what we're going to do is we're going to add an order flow component, and we're going to look for leadouts around the turns. Yeah, leadouts around the turns is similar to pulling, but what I'm calling a leadout is similar to pulling in the momentum, but it's in the order flow. I'm going to use the term leadout instead of pulling. That way I can use different terms and you know what I'm talking about. Yeah. So I have the trader oscillator is going to handle our order flow for us. Has some cyan needles, and it's got some magenta needles. And I'm going to look for these to be going higher, and I'll just show you what that's going to look like. Yeah. So I've got my price action panel and my specific pattern class. I got my momentum. Yeah, I'm going to trade it with the momentum where it's pulling, and then I'm going to look for a needle where it's going to a new low right there with. Yeah, with. Yeah. We could call this system the with. Yeah, the with. And I'll call that a leadout. Yeah. Is this a leadout right here? It is, but it's not the exact pattern class that we're talking about, so there's no arrow there. Yeah. That is. Could you have taken that trade? Sure, you could have, but that's not the one that we're talking about right now. Yeah. This is the pattern. Yeah, the lead out, pulling, 112, yeah, pattern class. Yeah. So once that pattern is established and tested, then we can add it to our arsenal of trading classes. Yeah. Oh no, we're going to trading class. Yeah. Now, also, once it's established, we can then, whoa, this is a big one. This took me 30 years to learn. Yeah. Loosen criteria. Don't tighten criteria, loosen them. How loosey-goosey can I get with this and it still works? Yeah. We're not going to spend a bunch of time on that today. Yeah. But that's another core concept. Yeah. So this is how super robust trading systems get built. And once you get these principles down, you can just start building them all day long. Yeah. So now let's take a look at what happens when we cross on the momentum and we're leading in the first occurrence, loosen criteria with 1 to 3 bars of the color change on the momentum. Yeah. We're going to use smart trade markers to do data trade analysis on the mark trades on the chart. Yeah, that's how we're going to do it. Yeah. And these are the patterns. So it's always going to be this shape. Yeah. Could have been this one, but we didn't get the lead out. It's going to be this shape, and we get the lead out. It'll be this shape, and we're getting the lead out. It'll be this shape, and we're getting the lead out. Yeah. And in every case, it's pulling, and it's pulling. Yeah. That's the system or the pattern. But Rob, what about all this other stuff? Well, that's a different animal. We're just doing the one. Yeah, I'm just going back. We're just doing the one. Only one. My father-in-law always says, only one. This is the only one. Yeah. Just the one thing. Now you can add more, yeah, but you keep it to itself, yeah. You keep it to itself. So this is 4-quadrant design philosophy in action. And so I'm repeating it here. The trade will go, you get the 1-1-2 pattern, you get the smart momentum color, you get this pulling, and then you get the trap trader oscillator, the order flow lead out. Yeah. So we'll look at the trade markers report. Yeah. Trade markers report. Now I can look at this and I can get all kinds of interesting things from here. Trade markers is extremely powerful tool for doing analysis. You can import your trades from Bloodhound right into this and do analysis. You can also have it tell you if it'll pass a specific prop firm eval. Yeah, super, super powerful stuff. Yeah, so we would have expected this to go its first bar about 96% or something. It came up a little bit higher than that. Would I expect this to be that level all the time? No, not necessarily. Certainly not, probably. Yeah. Yeah. And then went 20 ticks on that one, and then 20 ticks more on the next one. Yeah. And then 20 ticks more on the next one. Now notice that one's a little bit smaller than the one prior. And so I'd probably want to do something about that. Yeah. Probably want to do something about that. And it's a 20 tick stop and there's no break even or anything like that. Could have I clamped this down and probably improve the performance or something like that? It's possible, and I can just go in and I can check all these different things. I can make that third target a little bit tighter or decide that I'm just going to take 2 at 40 and not do 60. Usually I'll leave one on, like just in my own personal trading, I'll leave a one on and I will manage it just in case it's in a runaway kind of situation. So this is the basic trade marker report. Yeah, so all together then, establish a price action pattern classifications based on human behavior, establish a momentum pattern that specifically classifies that behavior, and then the order flow pattern that shows, yes, in fact, they're hitting this thing right now. Yeah, yeah, and that's the little system. And then you test it for robustness, use smart trade markers, yeah. And then using this approach that I've done here, we'd expect each input to be about 75%, like I said, with 96% theoretical. What if you're not getting 96%? Well, something's wrong. Yeah, either one of the components is taking away, yeah, but because you've got it down to that level, you can pretty quickly figure out what's going on. Yeah, that's the idea. Yeah, so if it's not working so well, you can find out quick, because like when I first started building automated trading systems in 1991. Yeah, they didn't even have software for it back then. I was doing a database. Yeah. So if one component completely fails, then the system should, as long as it's not below 50%, if it goes random on you, then at least you still got 90% according to base. Yeah, that's the idea, is that you're setting yourself up that even if you fail, you still can be successful. That's the idea. Yeah. So we could spend all kinds of time on the intricacies of that, and pattern class and all sorts of variations. Yeah, but we won't have time for doing all that today. Yeah. Yeah. So just know that the 4-quadrant methodology that we've used is solid over a large range of indicators and methods, and particularly the ones we use from IndicatorSmart, because these are the tools that I designed with this methodology in mind from the ground up. Yeah. So these things didn't really happen by accident. Yeah, it's a matter of design. Yeah. Okay, what tools did we use in today's webinar? We use the Smart Super Renko price bars. We use a 112 pattern on that, or the parallelogram, or the ABCD. Yeah. Smart breakpoints. We had that on the Smart Momentum. Yeah. Smart breakpoint shows you where the turns are, and that'll come typically before the color change. About 90% of the time comes before the color change. Yeah. And then we used the Smart Momentum, that was the pulling. And then we used the Smart Trader Oscillator for lead outs, and we use trade markers for trade and data analysis and research. Once you get this basic 4-quadrant thing down, literally you could take these indicators and build 1,000 different trading systems out of it. Yeah. Do you need to? No, you don't. But if you're inclined towards that, go for it. Yeah. The main thing is the one. Yeah, the one. As mentioned earlier, trade markers can import directly from Bloodhound. This is a very cool feature. Yeah, whatever your Bloodhound's doing, and pull it in there, analyze it, do prop firm criteria, see distributions, graphs, and everything else. It's very accurate. Yeah. Another cool thing about trade markers is that you can mark charts live. You can do sim trading with it live, and it'll fill you and just do it live. Yeah. So extremely powerful data analysis and trade and testing and research tool, a real game changer. And when I say real game changer, I mean that those of us that used that and developed it, everybody went on to have a great deal of success with it. So both Smart Trade Markers and Trader Oscillator Advanced are auto coupon eligible. Yeah. And so I have a resource page for you, IndicatorSmart.com/shark. Yeah. The document was Sharky. This is Shark. It's a resources page that shows you different resources from the webinar here. Yeah. So sometimes, like in the past, when I do a webinar like this, I just do this with Shark like once a year. Yeah. And we get together and do this. We've been doing this for years together, yeah. But a lot of times I'll put a package together, but we recently created a coupon system that is very powerful for building any package that you want, yeah. And it may be better than package pricing. So check out the coupons on the website. So I'm going to give you, I call this opportunity work. I'm going to give you an opportunity to take this to a whole nother level, just outside of this webinar, yeah, and to not just walk away and go, wow, that guy had a whole lot to say. And the opportunity work is this, because there's a method to my madness, yeah. Take your Sharky checklist, yeah, take your Sharky checklist, and each item on it, yeah, and the notes that are down below in that document, okay, and take each one of them and look at the little system that we built here, this little 4-quadrant strategy that we built here, and ask yourself, going backwards, so because what we did was we talked about the core concepts or principles, and then we built a little system. But what I'm saying is take that checklist and go back over what we've learned here and apply, ask yourself, how does each one of these core system building principles apply to this little system that we built today, and go back over it and reflect on that. And I pretty much guarantee you that there's going to be a giant beam of light going into your mind from the heavens. Yeah. Yeah. Do it back, or go on your checklist and ask, well, how does this relate to this core principle? How does it relate to that one? And if you didn't get the checklist, I recommend that you do is right there. Yeah. Okay. In this webinar, we haven't really begun to cover the power and advanced capabilities, yeah, that we could do with all this stuff. Yeah, it's pretty much infinite from what I've been able to tell. So if you've enjoyed these methods and concepts, you know, you could consider the trading room for advanced learning. You could consider getting the trading tools. Yeah, there's options to make this affordable for just about anybody at the website. So to learn more, IndicatorSmart.com/shark. Yeah, /shark. I'm going to review, so just to bring this full circle, okay? We started our discussion today with asking how many trades you need to take to be successful. Yeah, how many ones do you need? Yeah. Yeah, how many ones do you need? And we don't need to spend a bunch of time answering that question. Because if you have just the one and you're asking yourself, is this the one? Yeah. I've shown you one example of the way that you could approach your trading, and that one can be just that one. And then with practice, what you do is you can expand that out. You can say, well, what about this? What about this pattern and that? Yeah. And each one stands on its own. Yeah. And when you do it that way, you're extremely clear on what you have, and you're extremely clear if that one's not working. In fact, you probably won't even need to research it. You'll just know really quickly, yeah, whether or not it's working. Yeah. Before it fails, yeah, that's a big one too. So, and forevermore, yeah. And so the trade you take is that one, the one that you decide every time, the one that you see and the one that makes sense to you. Okay, guys, that's what I got for you today. All trading resources can be found at IndicatorSmart.com/shark. I think I have a few questions here, so I'm going to check and see what we've. These are great questions. Will you tell us the secret? Actually, Dave, I did. Yeah. I apologize, Pam, if it sounds stupid that I say yeah, but that's a question. Yeah, it's a question. So if you don't like that, I apologize. Yeah. Yeah. And Alex is saying trade markers is excellent. Thanks, Alex. Okay, so Red is asking, is the same tick size all instruments? And the answer is no. Terrence, it's good to see you, man. Always happy to see you. Yeah, thanks for kind words. Terrence says, thank you. Your trading indicators are amazing, very profitable. If you listen to the teaching, I know this from my own personal experience. Yeah. Thanks, Stephen, for kind words. So, okay, Red's asking about tick size for the bars. Yeah, really good question. Every market scales to a different thing. Now, as a general broad stroke rule, without getting to some other things, what's the minimum would be, because you got a bid, an ask, and a last. Yeah, so 3 ticks would be the minimum. Yeah, 3 ticks would be the minimum. I really don't like that. Why? Because it gets very, very noisy. Now, somebody like me, I could glance at the chart and I'd probably be able to tell. But like a new trader, you give them a chart like that, oh, wow, that's trouble. Yeah. So I used in this chart, I used a 20 tick example. I think we were using the NASDAQ. Now, the NASDAQ, I find the minimum's kind of like 16. Yeah. You could go smaller, and you could go smaller without it getting too noisy. But the problem is the NASDAQ is so crazy. We had, and I wouldn't know this if I didn't have trade markers. In the last couple of weeks, I had one. I was testing something out, and it marks the chart 240 bars to the right. Yeah. You can't trade that. Yeah, you're in the past tense no matter what, and this whole thing about past, present, future. So NASDAQ's pretty dangerous for most people, and people that trade the NASDAQ have reached out to me recently. I also believe we have reason to believe that there are several 100,000, more than several 100,000 people. There's been this explosion of these, prop firms, and you have like 700,000 people pulling data at one thousandth of a second. And I think they're having some growing pains in the last couple of weeks, and I bet that they're over there in their engineering department going, what are we going to do with this? Yeah, either they're going to have to jack their data situation, or they're going to have to do some things in NinjaTrader to make it work a little better. But as a general, when it gets behind specifically, as a general broad stroke rule, the on a 10-tick market, like say crude oil or the Russell, you can use a 10-tick bar with a 5-tick continuation bar. That's where I would start. On the E-mini S&P, at 8-tick reversal bar and a 4-tick continuation bar would be the minimum I would do there. Yeah. For gold, it's a 10-tick market, so use 10. You could use 10 reversal, 5 continuation. Yeah. Yeah, I don't really have a tremendous amount to say about the FOMC aside from be flat into these areas. Yeah. And wait for clean structure to start after the event. Sometimes the market can become extremely random after the event. And I believe even NinjaTrader put in, they just made a general rule. You go to full margins for 15 minutes until 15 minutes after the report before you have day trading margins again. I'm not sure that that's exactly how they're doing it right now. We have a trading room for the E-mini, and we got a trading room for crude oil. And I run the crude oil room. My room's a little bit more theoretical. And then Steve's room, the E-mini, is more signal based. And so if you're super interested in like learning about this whole translation between human behavior and trading systems and trading system design and all that, it'd be more appropriate in mine. I have posted a note on the homepage of oiltradingroom.com that I would urge you to take a look at that if you were thinking about getting on board with that. All these resources are available through IndicatorSmart.com, at least that can lead you to that. So that's why I gave you this IndicatorSmart.com/shark as a resources page. Yeah. So, what are my thoughts on the algo and AI craze? Okay, AI is nothing new. Keith and I were talking about this while we were cranking up this webinar. AI is nothing new. Okay, it's not. Even like when shortly after I started doing this, they were calling it, back then they called it genetic algorithms, fuzzy logic, things like this, okay? And it was the big rave, and the Wall Street firms threw billions of dollars into it 4 decades ago, 3 decades ago. Yeah. And guess what happened to them? They ate it big. Yeah, they ate it big. So, do I think AI can trade? I do not. I do not. If you want to go find out, this is just my opinion, yeah. But if you want to go find out how smart AI is, go get on an AI thing and start asking it some questions, and then start asking it questions about its questions. Yeah, it's going to start getting really rough really quick. Yeah. I had something, I forgot what I put in ChatGPT yesterday. I asked it, could you write that? Could you write that and make it sound more human? It took something that was beautifully written and it turned it into something horrible because I wanted it to speak like a normal language. Yeah, because normal language doesn't use terms like it is an exemplary manifestation. Yeah. People don't talk like that, but AI will talk like that. Yeah. And it sounds all beautiful and everything. And it's good writing. Yeah, it's beautiful writing. In fact, darn right impressive. But for trading, I don't see it now. Like Keith was saying, we're kind of in the first stages. We'll see. Maybe they'll get it right this time. I don't know. Yeah, so, any other questions, guys? Usually we don't have time for the questions. Keith sent me a thing. He goes, keep your webinars singular. And so I finished a little early today. I want to thank everybody for kind words. Pam, sorry I said yeah. It's a question. Yeah, I'm trying to get you to think about it. Yeah, so. All right, guys, if there aren't any further questions, best data series. Not sure. Depends on which one you're trading, Don. We covered that a minute ago. Um, for basic starting, we have a whole population of people that just love ultimate tick bars and ultimate order flow bars. Super lots of people. Yeah. No one-on-one coaching. I stopped doing that 10 years ago with the trading rooms. The trading rooms are what that's for, and it's like extremely cost effective. You can ask any question that you want in the trading room, including things like where do babies come from and everything else, and we will answer. Yeah. Yeah. Jeff says, thanks. Loving the indicators and the ES room, changing my trading for the better. Yeah. And yeah, so for the trapped oscillator, trap trader oscillator, the ES, my most basic starting would be a 8-tick reversal and a 4-tick continuation. Yeah. And that also keeps it balanced within the structure of the pricing. Now I do some things like I'll trade the ES on like a 6-tick bar. Yeah. So it also becomes an issue of what you're used to or what you see. Like I said in the beginning of the webinar, everybody sees things a little differently. But if you're used to trading on a 6-tick even bar in the ES, then all the power to you. I will tell you this: if you trade on that, most people are going to open up bars and reference them to the beginning of the day or something like that. And what that does is it might put a lot of traders on the same tick. That's another cool thing about all the bars that we do is that you can do offsets with the bars. It's extremely powerful. So you could have, like on a ES chart, if you automated something in Bloodhound, you offset the bar 1 tick and you do the system 4 times, you get 4 different systems out of 1. Yeah. No, the trading rooms are different, entirely separate. Yeah, they're completely unrelated. Yeah, so yeah. Terrence is saying thanks for my time, and Steve is an awesome teacher. Steve does the ES room. If you're a beginning trader, that might be a more appropriate place for you. Yeah, he's very passionate, sincere in what he's doing. Yeah, and Steve's a great teacher too. He has a way of taking the simplest things and just boiling them down to. Sometimes he says something to me, and it just like stops me in my tracks. I'm just like, that was the most simple, amazing, straightforward way of saying it. And I just, we were having a conversation the other day and he said something like that. Steve is just amazing for that. Yeah. So yeah, thanks, Terrence. Thanks for kind words, everybody. Sorry, Pam. Yeah. Keeping it simple is good. Yeah. So, Keith and Jeremy and everybody at Shark, thanks for having me this year again. And I look forward to doing it again and again, year after year. But thanks for having me. And Keith, I hand it back over to you. Thank you. Thank you.
Great. Good job, Rob. Thanks. Anyway, yeah, well, to clarify, when you said we were talking about AI, what I really said was that we're in the beginning stages where AI is useful and interesting and kind of fun, but I'm sure eventually it'll destroy us all.
Yeah. Well, that's like, yeah, well, truck talking Terminator here, man.
Yeah, yeah.
Yeah.
Maybe I've seen
Yeah,
like
Skynet.
too many
Yeah.
times or something. I don't know.
Yeah. Okay.
Well,
Thanks,
cool. Yeah,
everybody.
it was interesting today. Both speakers talked a lot about market psychology, how the markets move together in ways that you can take advantage of. Tomorrow's webinar, I will actually be, Steve says Amazon is Skynet in trading. Could be, yeah. I don't like to think about it. So tomorrow, go easy on me. So this will be my first Shark Week webinar. Had to sort of fill in a slot that somebody else, unfortunately, another speaker had to drop out at the last minute, but thought it'd be kind of a neat opportunity to discuss the few things that I'm uniquely good at, right? I'm not an expert trader. I've been in this industry. I've worked for Shark Indicators for 10 years. And in that time, I've done probably about at least 400 demo sessions with new users, right? I'm that guy that someone calls up and says, Keith, I saw your stuff online. It looks interesting. You know, I want to learn more. And I've noticed that I would probably say about half the people, maybe more, that I talk to, their goal, their problem that they're trying to solve is that they just can't get out of their own way, right? They have a system in mind. And I'm sure you can relate to this if you have any experience in trading. You have a system in mind, you think you know what you're doing, but when you actually start getting into what we call the heat of the moment, right? The actual trade, you start to realize that your own decision making, especially the emotional side of it, can get in the way and cause you to make mistakes. And so a lot of people are trying to say, hey, I know that if I were a robot or if I were the perfect AI, then I would be profitable. I would be doing well, but I just can't get out of my own way. And so they're looking for ways to offload as much as they can, not everything necessarily, but they say, oh, I know for sure that when these things happen, I'm going to enter the trade. Or I know for sure that when these things happen, I want to move my stop loss or flatten the order, or whatever, manipulate the trade in some way. I know for sure I plan to do that. So let's offload that work onto the computer and allow me as the trader, as the expert of my own system, to free up my mentality and focus on the things that do require a human and not the AI. So that's my goal tomorrow. It's really just going to be pretty casual. So come on in if you just want to see. First of all, we're going to talk about introducing Bloodhound and Blackbird for those who have just got a taste for it. Not everybody here knows everything about what our products do. So we're going to introduce it from that lens. So anyway, come on back tomorrow if you're curious. If you're not curious about that, then skip right past me and go straight to Chris Lassen. If you've been in our world for a long time, you know he's awesome as well from Lizard Trader. Looks like he has a specific topic that looks pretty interesting for certain types of trades. So anyway, any last minute questions? Otherwise, we will end it here and see you tomorrow at 1 p.m. Doesn't look like it. All right. Thanks, guys. Have a great day.